Now, Ukraine just hit Russia's biggest refinery about 2,500 kilometers from the border. In response, Russia has intensified its campaign against Ukraine with repeated large-scale missile and drone attacks. Now, pro-Kremlin reports have highlighted the use of the heavy FAB-3000 glide bombs, and President Vladimir Putin has warned that the retaliatory strikes will become even more powerful. On the heels of the news, the United States and Iran traded strikes for a third straight night over Hormuz. Two wars, one commodity in the global energy market is caught in the crossfire. The Kiev's drones tore through Gazprom's Neft flagship plant in Siberia on the 6th of July. Now, that was Russia's last untouched top 11 refinery, and now it has been hit. Now, these, remember, are not random targets. Refineries convert crude into gasoline, diesel, jet fuel, and the fuels that also move Russian tanks. Ukraine calls them legitimate military infrastructure and not energy infrastructure. Now, add strikes on Baltic export terminals, and Russia is now running a patchwork refining sector that is resulting in fuel shortages spreading across its 11 time zones, even as it keeps exporting crude. Now, on to Hormuz. 3 consecutive nights of U.S. strikes on the Iranian radar, missile, and naval sites, and the Iranian response has been strikes on 2 UAE oil tankers inside of the Omani waters. Simultaneously, Trump has announced a blockade and 20% tolls for ships to transit the strait. Now, remember, the strait, of course, is a choke point that carries a fifth of the world's oil and LNG. Brent's answer is nearly a 10% surge, marking a single-day jump to above $83 per barrel. It is the sharpest spike in over 6 years. The resurgence has come after crude has dropped to pre-war levels last month on truce hopes. The pattern of both the wars are now structural and not episodic. Tanker rates from the Gulf already have touched multi-decade highs, and earlier this year, when Hormuz had briefly shut down, war risk insurance premiums are climbing again. The vessels are rerouting via the Cape of Good Hope, and this has added roughly about 15 days and real fuel costs per voyage. They put both fronts together, and Russian refining capacity has been degraded on one side, Gulf transit taxed and threatened on the other. Now, that's not too regional flashpoint, but it's a pincer on global energy logistics, and shipping is in fact paying the toll on both ends. Now, the world faces a surge in terms of inflation from increased cost of everything being shipped through Hormuz. The IMF and the World Bank have already warned of the hit to economic activity and growth. Economists are now penciling in a global recession and a permanent productivity loss for the rest of the year. For all the latest news, download the WION app and subscribe to our YouTube channel.